On the show today, we'll discuss the future of financial services in Africa. As always, you can join the conversation with the hashtag Beyond Market, and you can follow my Twitter handle too at Esther Ubodaga. Now, blockchain technology is leading the new era of transformations in financial services across the globe, but capital market regulators across Africa are still trying to figure out how to incorporate this into their markets. Deji Soetan, Managing Partner, Blockchain Asset Management, and Andrew Nevin, Chief Economist at PWC Nigeria, join me today to discuss this. Thank you, gentlemen. Pleasure to have you on the show today. Now, we're entering a new digital era that could transform finance as we know it. What we hear now is that the future of finance could be without banks, but with transactions automatically approved in a matter of seconds, significantly cutting costs and boosting efficiency. But before we go into the financial services, I want to talk about, share your experience perspective on how, to the degree to which we're seeing blockchain being deployed in Africa, particularly Nigeria. Deji, let's start with you.
Good afternoon. Hi. So the blockchain technology is quite new across the world, actually. Most people, when they hear the name blockchain, they relate it to the Bitcoin and they relate it to cryptocurrencies. And the first thing I tend to tell people is, like my organization, we deal with the blockchain technology itself, which is the technology that sits behind the Bitcoin and not cryptocurrencies. So taking that into cognizance, we basically looked across the Nigerian economy, more of the African economy, to be honest, and we looked for various use cases that would apply. We did have a bit of a challenge approaching people within the private sector, but the one thing that really shocked me was we got approached by the Nigerian customs saying that they actually wanted to implement blockchain services, and it was like a surprise that Nigerian customs. Anyway, we had a sit down with the ACG modernization, and he let us in on his concept of what he wanted to do with the blockchain.
So he had prior knowledge. He knew what he wanted.
Yeah, he knew what he wanted. So put it at this, he knew it from a conceptual stage, that he knew the blockchain technology existed. He knew that there were certain aspects of it, especially to do with transparency, to do with the fact that you can put irrefutable information onto the blockchain. And he knew that this was something that would be very helpful in moving the Nigerian Customs Service forward. So he came to us and he says, you know what, is it possible for us to come up with a concept document? We went away, we sat down and we did an architectural drawing for him, explaining what we could do. So what he's doing with the blockchain is he's looking at excise duties, to be precise. Okay. So excise duties, definition of an excise trader is any manufacturer of goods, excisable goods in Nigeria. So what we're doing with the blockchain in Nigerian Customs Service is we're putting all excess licenses and permits onto the blockchain. So that means that you go away from the scenario whereby it's possible for you to have a fake or a copied excise license. It's verifiable on the blockchain. It has a barcode, a QR code. All you need to do is scan it with a normal smartphone. You're able to confirm the authenticity of the document. Then going on beyond that, he's then looking at things like the actual products themselves. So what they're doing is they're actually tracking manufactured goods right from the raw materials that come into Nigeria. So a lot of manufacturing, during the manufacturing process, a lot of these raw materials, when they come into the country, especially if they're imported, they're exempted from excise duty. So we need to make sure that these raw materials are then used in the production process.
Okay, Deji, hold that thought for us. Yes. Andrew, are you surprised? I'm surprised at this because, like Deji mentioned, when we hear blockchain technology, at least, I mean, to the best of my knowledge, what comes to mind for me is, for many people, is also cryptocurrencies. And when we watch TV, especially that boom in the cryptocurrency and Bitcoin that we saw and the ensuing crash, you know, so is that Bitcoin or cryptocurrency, is that what we know? But to hear that the Nigerian Customs is actually deploying it, what are your thoughts?
Well, I think a year ago we were in that space where people were taking blockchain and cryptocurrency and conflating them. But I think we've kind of moved on, and more people understand blockchain is a technology that can be used in all sorts of ways, and it's just exploding. So, I mean, one example in Africa, we've just had the South African Reserve Bank do something called Project Coca, which was a real-time gross settlement system with the 7 largest banks in South Africa. So effectively what happens is they're settling in real time immediately between them and the South African Reserve Bank, because the blockchain allows everyone to see the relevant information, the same information. This Reserve Bank can then monitor the financial system in real time. And they found it was a fantastic experiment. They proved that it could work. It reduced reduces a lot of the transaction costs. It gave the SIRB a much better view on what was happening in the financial system. But then when you take customs, this kind of example, we have other examples in agricultural commodity chain. We have people like SureRemit, which did an ICO, but is looking at the remittance market into Africa. And we could list, Deji could list at least 20 use cases that are being looked at in Africa and Nigeria right now.
Now, it's interesting that the Reserve Bank of South Africa conducted that, did that project, because, while all of this was happening, especially with the cryptocurrency, that mad rush and the way we saw it, rise exponentially, we saw, or we heard many times, the concerns expressed by regulators, especially central banks across the globe, because many people didn't really understand it. And because, of course, being a regulator, they had a role to play to protect investors, keep sanity in the market, as it were. But for the Reserve Bank of South Africa to conduct this and to see that it actually worked, I mean, what does that take us from there?
I think what that shows, though, is that there is this sophistication of understanding the difference between cryptocurrency and the technology. So Central Bank of Nigeria has come out and essentially said cryptocurrency, so what you think of as Bitcoin or Ether or Litecoin.
Okay, not the blockchain, not the technology that drives it in the first place.
But the cryptocurrency, they've come out and said, look, it's highly speculative, there's no backstop, you're on your own. And they understand that. But they also understand, they set up a committee to study blockchain. There's a lot of work going on in the CBN about blockchain. They're not trying to stop blockchain, they're trying to figure out how to use blockchain in our economy.
Okay, let's talk about the financial services sector now, and all that's been going on. We've seen huge investment in fintech startups, using blockchain technology, and what we hear is that they have the potential to disrupt the big financial players. Right. I mean, what we're hearing right now is that we could potentially look at a future where there are no banks, and also what I also hear is that banks right now, or some banks, don't know whether to see this technology as a friend or a foe. What are your thoughts?
So it's so the thing about that is when it comes to the banks, you have a few banks, because we actually working with one or two banks who are actively embracing the blockchain. Because the thing is, within the bank, there's so many processes that exist within the bank that using the blockchain, you can actually make things a lot more seamless. So the important thing of the blockchain, when you look at the attributes of the blockchain, you're looking at transparency, you're looking at irrefutable data. And at the end of the day, the most interesting description I have of the blockchain is the fact that it creates trust in a trustless environment. And when you're looking at the banks, you're dealing with all kinds of intermediaries, you're dealing with documents, you're putting out things like bank guarantees, you're putting out letters of credit and all kinds of banking instruments. Now, there are opportunities to put these kind of things onto the blockchain, so therefore you create an environment where you have this irrefutable information on the blockchain, and then you also give the third party who you're giving these documents to the opportunity to be able to verify these documents without any doubt whatsoever. And that's a typical use case that you can look at within the banking sector. So there are some banks that are really looking at it and they're really embracing these things.
Andrew, your thoughts?
Well, I think the more sophisticated banks, and many of them in this market, realize that in 5-10 years, banking is going to be completely different than today. So if you do what you're doing today, you're not going to be in business in 5 or 10 years. So whether it's a friend or foe, it's a friend if you can embrace it. And you're going to have to add a lot more value. I mean, we've had banks in the past 5 years make money here by simply collecting low-cost deposits and then buying government securities. That model is not going to work in the future. People are going to have a lot more easier access to buying higher yield securities that are tokenized on the blockchain. So they're going to gravitate towards that. So the only way the bank is going to survive is if it's adding a lot more value. Well, how is it going to do that? Well, a lot of it's through their own internal, embracing all of this and bringing their cost structure down, bringing the cost of financial services down. A lot of it's going to be around the big data, so particularly around where you're giving credit. How do you credit score? We haven't had very successful credit bureaus here. They're still highly manual. But these things that banks are going to rely on, the successful ones with big data, they're going to be working with the BVN, they're going to be working with other data sources so that they can credit score effectively. But ultimately, the beneficiary of all this should be the consumer and the retail investor, because costs are going to come down, transparency is going to go up. And I think one critical thing for the banks is they haven't done a very good job in the past few years in creating assets that people can accumulate wealth with. They haven't sort of, if you think about banking in my own country, Canada, actually half of a bank is wealth management. And the Nigerian banks have not really created ways for Nigerians to build up their wealth. So I think if they're going to still be in business in 5 or 10 years, they're going to have to fix that side, and blockchain is going to be a big part of creating those assets.
Interesting. Deji, let's talk about, blockchain asset management, the kind of services, apart from, what, perhaps similar to what you give to the customs, but, just broadly speaking, what kind of services? But before then, I also want to hear your thoughts on going into the industry at first. Yeah. I think you've talked about that already. Okay, then let's talk about the kind of services that you render to your clients and how they've received them so far.
So I think just like with any technology or any kind of solution, I think the first thing is you have to understand what the business processes of the client are. You have to understand what people call the pain points, and then you then adjust the technology according to the challenges that they're facing. At the end of the day, within any business, it's about reducing costs and increasing your revenue. So it's all about the bottom line. So in a scenario where you can actually use the blockchain to do this, because some of the case studies and some of the solutions we're providing, we're able to actually release some of this dead capital that Andrew mentioned or he's going to talk about, and also the fact that we're also able to generate additional revenue that the banks don't actually know exists, because we're providing a different service, and based on this service that we're providing, they're now able to offer additional services that they could not offer previously. And then from these additional services, they can actually...
Such as, I'm intrigued. Just perhaps one example.
So I'm being a bit careful here, because obviously we're talking trade secrets here. But a typical example is verification, for instance. Okay. So there are verification services that currently the banks don't currently provide. Verification of particular types of instruments and things like that. Okay. So these are ways in which they can actually, because the end so there are a number of pain points for certain consumers, and if you're able to solve that pain point, and like for instance, there's a scenario whereby with certain documents, the process of verification can take 7 days, it can take 2 weeks. But if you're able to bring that down to a matter whereby, because of the transparency, it's almost instantaneous, whereby the end user can see this information. Another typical example is like the use of smart contracts, for instance. Yeah. So the smart contract on the blockchain term is like, it's an automated contract where you're waiting on certain activities or certain things to be verified. So you have a scenario whereby at the end of the day, someone is there, you have a buyer, you have a seller, you're trying to exchange goods, they're exchanging goods for money. And if you're able to put everybody in the position whereby the person who is receiving these goods is sure that they're going to receive the goods and they are this specification and quality which they expect, and the person who is selling the goods knows that they're going to get their money whichever way happens. And that's a typically smart contract that can be implemented. Like we were at an event earlier today, and someone gave a definition of a smart contract. Like a typical example is travel insurance. You're sitting in an airport and your plane is delayed. Under normal circumstances, what happens is you go on your flight, you get back, you then claim on your travel insurance. But because it's a smart contract that's written into your travel insurance, the moment the plane is delayed, it executes automatically, and you get your payment for the delay through your travel insurance there and then. So these are the kind of services that can actually be offered within the...
disruptive.
Very, very disruptive.
Andrew, I'm just thinking about how this could, if this spreads, in terms of, especially in corporate Nigeria, how it could potentially change the way we view this technology. What are your thoughts? We have a minute to break.
Well, Deji mentioned this concept of dead capital, and I think maybe after the break we could expand on it, but this is something the Vice President's been talking about, and I was at an event where the Chairman of Access Bank was talking about, which is we have a lot of capital locked up that can't be used effectively. It's locked up in land, it's locked up in agricultural commodities. The use of the blockchain technology that gives transparency to other investors or people who can lend into it can unlock that capital and really drive our growth going forward.
Okay, gentlemen, thank you for your time so far. We'll take a quick break and we'll be right back to pick up from where we left off. I've been speaking to Deji Soetan, Managing Partner, Blockchain Asset Management, and Andrew Nevin, Chief Economist at PWC Nigeria. If you're just joining us, we are discussing the future of financial services in Africa. My guests are Deji Soetan, Managing Partner, Blockchain Asset Management, and Andrew Nevin, Chief Economist at PWC Nigeria. Gentlemen, thank you for your time so far. Andrew, let's continue from where we left off, talking about all that capital that's locked up and banks not being able to give customers the right instruments to create more wealth. Let's continue.
Well, if you think about it for a moment, so a farmer comes along and he or she harvests the rice. The rice is a commodity. It's priced in US dollars. Now, if you're ExxonMobil with an oil block in Nigeria, and you verified how much oil you have, you can go and borrow money to develop the field, you can sell the oil, you just pay the interest, they know there's going to be other, you have lots of mechanisms to finance it. But the farmer who also has a valuable commodity in this market has very few options. And of course, all the farmers in the same region are harvesting the rice at the same time. There's only one or two buyers that come along. You know, when there's many sellers and only one or two buyers, the price is going to be low. So what can you do with this technology? They can't easily borrow from banks because there's no transparency on what they actually have. And of course, to the extent they get from banks, we complain all the time, interest rates are 21%, but rice is priced in US dollars, and the US interest rates are 2%. So there's a lot of gaps in the financing mechanism. So if you put this commodity in the blockchain, and the term we use is you tokenize it. So you now create a tokenized asset that the rice represents, that is followed in the physical system and in the blockchain system simultaneously. All of a sudden, the farmer can do some pretty interesting things. And when they go, they don't have to sell their rice. They can just put it into the warehouse. It has a value. They can borrow. Well, interest rates in Europe are negative. Someone's certainly going to lend against a US dollar asset at 4%, 5%, 8%, not 25%. And then as the rice moves closer to the market, it of course is gaining value. And the farmer can decide when he or she wants to sell, rather than just selling at the gate. And that becomes very powerful. You've really unlocked the capital. But it's also similar to land. We've talked on this show before about the land registry. We have enormous difficulties in this country because the real estate market's not vibrant. PWC viewpoint is being real estate's the most important sector to get going. But if you don't know who owns the land, if you don't know who has the mortgage, if you don't know what the value is, very hard to do that. So the blockchain is massively important, again, for that industry. And then if I have a piece of land and I want to start a business, I can get a mortgage on it. The mortgage provider knows that's the only mortgage because there's no other mortgage on the blockchain. The valuers have put their value on and compared it with other comparators. The tax authorities get their piece, so they're happy about it. So those are two examples where we really can unlock capital. We think we don't have enough capital in Nigeria, but we're just not unlocking it. And as I said, the vice president himself came out 2 weeks ago, made the same point.
Interesting. I mean, very interesting. But I'm just wondering, how do we begin to maybe not get the word out? What are your hopes or your strategy, rather, in terms of how you want to expand your clientele and just get that word out there that, look, blockchain is an opportunity that can unlock so many other opportunities and make life easier for corporates within the business community in Nigeria?
Well, the saying is, if you want to eat an elephant, you take it a bite at a time. So I guess you do it one client at a time. Yeah, I could say that I'm one of those people who is trying to spread the gospel of the blockchain, but I'm trying to spread the right gospel, not just the fact that we're talking about the blockchain. So going back to the customs project, a typical example is how we're tracking production, how we're tracking products right from raw materials through the production cycle through to the end and to the finished product. And then from there onwards, we then are able to track the product even further through the supply chain. So what this does is it creates a complete provenance of any product that is produced in Nigeria. So the idea behind it is, with the Nigerian Customs Project, they are supposed to, or the intention is to have a data repository of every single manufacturer in Nigeria. This is very important economic information for Nigeria as a country. And this is the kind of information that today is incomplete because you don't have that you don't have one single source, one single version of the truth in terms of the number of manufacturers you have in Nigeria. There's so many other use cases that are going on in Nigeria. For instance, a typical example is the Nollywood. Nollywood is one of the biggest exports that has come out of Nigeria. Nollywood and music, for instance. And I know that the digital rights are actually being registered on the blockchain. So, like Nollywood, there's a project, I think it's called the Nollywood coin. There's actually an ICO that was done, and there's a coin that is supposed to protect the rights of the directors. Because what tends to happen is majority of the money actually doesn't go to the people who actually produce the films. Okay. And there's so many other sectors like that where you have use cases that the blockchain is very useful in.
Andrew, I like the example you use in the agric sector. And I know that there was a project that PWC, you were involved in, the Being Kabi project. Could you Talk a bit about that.
Binkabi was founded by a PWC alumnus, Vietnamese, but who spent last 6 or 7 years in Nigeria. And he is trying to do exactly what we discussed, which is to be able to tokenize the assets of farmers so that their incomes go up. Okay. And in addition, there's another aspect of Binkabi that's very, of course, Binkabi is a West African word. It means don't fight with your neighbor. So it really is an African company. Wow. But the other aspect of Binkabi, tokenize the assets so the farmer can have more choice about financing and when and where to sell the product. The other thing that Binkabi is trying to do, which I think is very interesting for Africa, is take the US dollar out of the trading system. Yeah. So what happens today, Cote d'Ivoire and Ghana trade, and in many cases, some cases on the border they use local currency, but in many cases for organized trade they use the US dollar. Now that doesn't make any sense, it's expensive for us. So Binkabi is trying to figure out a system where you can actually block off. So if trade goes between Vietnam and Ghana, Vietnam exports rice to Ghana, Ghana exports cashews to Vietnam. You can actually offset them, and you don't need, people are paid in their local currency, you don't need the US dollar. And that's something that if Africa could figure out how to use the local currencies, and of course use Asian currencies to trade with Asia, it would be enormously beneficial for us.
Okay, now back to the financial services. With that experiment by the South African Reserve Bank, how do you see blockchain changing the financial services landscape on the continent? Is it going to move? At what pace do you think it would move? And do you when you look down to the future of banking in Africa, financial services, what do you see? Will banks have bought the idea? Will banks have gone with the flow, as it were, and just sort of found a way to make it theirs alongside? Because I know the fintechs are also going to be major players.
Right. So I think this is very interesting. I think that it's going to be a battle. On the one hand, you're going to have the traditional banking system and the central banks. If they innovate fast enough and innovate together, maybe they'll create, because remember, a lot of these solutions, like the Project Coca at the South African Reserve Bank, requires cooperation within the industry. You needed the 7 banks working together with the 7. Yes. So it's not one bank deciding to do the blockchain. It's the industry deciding to do it, or around KYC, AML. If the industry works together fast enough, maybe they can create products and innovate fast enough to stay in business. On the other hand, the fintechs that want to take them on, they're also innovating fast. So I actually think it's going to be, the next 10 years are going to be a massive battle between those two forces. If the existing industry players can't cooperate to improve the system, they will lose in the end.
So do you think that, the best case scenario that Andrew's painting here will be obviously broad collaboration between the regulator, the fintechs, the banks. Yes. What scenario do you see playing out in Nigeria from your experience so far?
I think the fintechs might actually be the winners in the long run, because the fintechs, because like we're small, we're very small, nimble organizations. Like my organization, there's just 3 main partners. We can make decisions very quickly. We don't have a lot of the legacy that the banks have. So like, for instance, I'm an organization. I was born in the cloud. I exist in the cloud. I don't have any of the infrastructures that a lot of these banks have in terms of resources. My resources are spread all over the world. We're not stopped by barriers. I work all across the world. So there are a lot of traditional things that the banks have that kind of stop them from being as nimble as organizations like mine are. But in my organization, we can make decisions in this flip of a hat, whereas in the bank you have to go through a number of hurdles. But then the key thing, which Andrew mentioned, is the cooperation between the banks. I really don't see that cooperation happening. Yes, there might be something coming from
the way the banks view the fintechs.
Yes, I think like at this point in time, there's a lot of competition. So like there's a lot of things going around that the fintechs are actually what's the word? A threat.
Oh, at the future. I've heard that phrase.
But I think that if anything, I think the bank should embrace the fintechs. So I think, like, for instance, one of the preferred ways we would love to work with the banks would be in partnership with the banks, rather than provide services or rather just sell a solution to them. I'd rather be in partnership with the bank, and then that way we can develop solutions together.
Have you made moves?
Oh yes, most definitely. But you see, the thing about it is, like, remember that we're dealing with a technology that maybe over the past year or so there was a lot of skepticism around it, but that has changed, and people are a lot more aware.
People now know the difference between
cryptocurrencies and the blockchain. So that has changed, and I think one of the things that is really giving us a lot of credibility is the fact that we are one of the very few organizations that has actually implemented a blockchain solution. So we're obviously, it's based on we're using, we're an Oracle partner. We're actually Oracle's first blockchain partner in Africa. But because we actually have implemented a solution, whereas a lot of the concepts, a lot of the blockchain concepts, they're concepts.
Okay.
They actually haven't been implemented. That's where the difference is.
Okay, we have exactly 1 minute left.
Yes.
Andrew, last thoughts on this issue?
Well, I think very quickly it's going to go to even bigger issues than financial services. Identity.
Sorry to butt in, one key concern has been nobody knows the direction this technology is going to take in the future. That's also a key component of this. What are your thoughts on that?
Well, I think it's fantastic that there are so many use cases. The supply chain for pharmaceuticals, identity, as I just said, voting. I mean, all of these things are critically important, and people are figuring out, hey, to have one version of the truth that multiple parties share, it can change everything.
Absolutely. Thank you so much, gentlemen. It's been an absolute pleasure having you on the show today. I've been speaking to Deji Soetan, Managing Partner, Blockchain Asset Management, and Andrew Nevin, Chief Economist at PWC Nigeria.